Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having initially weakened after last week's Reserve Bank of Australia's rate cut of 25 base points from 4.1 to 3.85%, the Aussie dollar pair remains range bound, but on Friday it took a turn when it rallied sharply as the US dollar index fell to a 2-week low of 99 figure. This weakness helped the Aussie pair push near the level of 65 cents and placing it in a prime position now to test the key level of 65.20 to 45. Meanwhile, the RBA's rate cut was accompanied by an unexpected dovish commentary from Governor Michelle Bullock, who described the move as proactive and supporting confidence amid slowing inflation. She reiterated the board's readiness to take further action if necessary. So as we turn to the technicals, all eyes will be on this key level of 65.2045, and a break above there could give an extension on towards 66 cents, with any weakness coming back into play around 64.45, where demand may return. The euro was also firmer. As I mentioned, the dollar index, which measures the greenback strength against a basket of 6 major currencies, fell to a 2-week low following the House approval of Trump's tax bill, which could add nearly $4 trillion to the US debt over the next decade. The US dollar did shake off the Fed speaker's comments last week, and along with that, the ongoing sell America trend still seems to be in play as the market sees the US bonds, equities, and the US dollar pressured as it sells off by Trump's trade war and Moody's downgrade by US government debt from a AAA to AAA1. This week, market will be focused on key economic releases, including Germany's preliminary CPI, the US FOMC meeting minutes, the US preliminary GDP, and the core PCE price index. These will line up the potential move for the euro, and the dollar may slip lower, but we could see a slightly subdued start due to the Monday holiday in the US of the Memorial Day. When we turn to the technicals, we can see that the break above 113.80 may lead on towards the region of 115, but overall though, the bullishness is in play given by the technicals, so any pullback likely to be limited. When we turn to dollar yen, the bearishness has played out further and now closer to its objective of 142.1020, seen as a short-term target that may linger on towards the bottom side here in April of around 140, and keep an eye on lower than that as we turn to the monthlies, just in case we see a further drop that could open the way towards 127 to 130 as a broader call. Nevertheless, the bears are still weighing on the market, and any upside attempts should be limited, with a cap around 142.85 to 143.45. Turning to the British pound, the uptrend strengthened significantly on Friday after a strong 5-day rally, breaking above the 135 threshold, posts a 3-year high around 135.40 and still has further room to rally, given the fact the technicals are still somewhat strong. Behind that, the surge was driven by robust UK retail sales, and along with that, with a weaker US dollar. The April retail sales climbed by 1.2% month on month, well above the 0.2 forecast, with annual growth accelerating to around 5%, reflecting a resilient UK consumer. However, UK PM data presented a mixed picture, but overall though, we could still see the market rally on. But the question is now, what will the Bank of England do? Will they cut or hold? Given the numbers, we may see a slightly backward step with the Bank of England and therefore see rates on hold at its next meeting. Nevertheless, the target now looks towards 135.70-80 and maybe on to 137 as a potential move. Wrapping up with commodities, also saw a strong move and still pretty much on track to see a rally beyond 3,368 and maybe towards 3,400, and still keeping in mind this level here is still the all-time high and therefore around 3,500. So the balls are still very much playing with this technical play out. Let's see how it plays into the start of this week. Wrapping up with oil, a little bit mixed, but we've got an engulfing candle here. And therefore, from the recent rejection from the lows around $60 a barrel, the market may be on track for a rally back to retest the highs around 64. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoyed the great start to the new week.